Let's look at Corsair and do a deep dive in their financials. We're going to look at their quarterly report for their second quarter. Now, this is entertainment purposes only. Please consult a professional. Now, we're looking at the second quarter, 3 months ending in June. So if we look at 2020 versus 2021, we can see that there's a $90 million increase in terms of how much money they brought into the company. In terms of the profit they made off of that money, it's a $25 million increase. But, and this is very important, the profit they had from their net revenue is 28% in 2021, and it's 28% in 2020. So as they grew net revenue, the same amount of profit was increasing at the same rate that it was up until now, I suppose. Now, why is this important? Well, first of all, it's obviously good that it stayed at the very least the same and didn't go down. But what I'd like to see is economies of scale. As the company grows, as they produce more, it becomes cheaper for them to produce more. And so the gross profit, I would hope, would go up. So this would be a question. Is this going to continue to, always be at this 28%? Or is there a chance that this will go up? Something I'd want answered. Now here is what I feel is a red flag. Not a red flag I want to invest, but a red flag that I need to know the answer to this question. Sales, general, and administrative expense increased 24 million. And so that gross profit increased 25 million, give or take. Well, this expense kind of knocked that out. And so if the company grows in terms of revenue and profit, and yet this expense is going to keep growing, is that what's going to happen? So the company's never going to make more money? Or is this a temporary thing, right? That's what I'd want to know. So not a red flag that I wouldn't invest, but a red flag that I really want to know the answer to that question. Now, in terms of their operating income, primarily because of this expense increasing, even though the profit increased, their operating income actually went down. Luckily, they have less interest expense. Their debt is, being extinguished. They don't have to pay as much debt. And so at the end of their day, their net income went up by that amount. So it's 27 million versus 22 million. So it's gone up 5 million because they had that much less to pay in terms of their debt. So I think that's a positive. They were kind of saved by this technicality with their debt, or I suppose good fiscal planning. So that's a very strong positive for the company that they're extinguishing their debt. I think that's great. Now we're going to look at the 6 months ending in June, and primarily because the cash flow statement is going to look at this segment, the 6 months. So the 74 million versus 23 million, which is quite a big jump. And you can see similarly a big jump in profit, $110 million jump. That's pretty big when you're looking at the 6 months. But this I thought was really important. This is a $48 million of that same scary expense I was talking about. So the 3 months, it was $24 million increase. 6 months, it's $48 million. You double the time, you double that expense. The expense, I suppose, is not necessarily growing at an exponential rate, but it's clearly growing. It's clearly been there, I suppose, for 6 months. I don't know exactly how far back this growth goes, but for 6 months, when you're looking at this whole question, so this is not a blip as, this 1 quarter, they had to increase this expense and it's going to go away. No, for 2 quarters, it's been there. Why? What's happening? Is this going to go away? Like I said, a red flag, I really want to know the answer to that question. Now, if we look at the consolidated balance sheet, you can see the cash is going up. I suppose that's good. Accounts receivable is going down. Not a red flag, but I'd like to know a little bit more. Why are there fewer people buying from or owing money to Corsair? Maybe that means that they're buying less and less. So for example, Best Buy, when they buy from Corsair, they're not going to necessarily give cash to Corsair. They're only going to do that after 30 days. In that 30 days, Best Buy plans to sell their Corsair product to a customer. They'll get the money, then they'll use that money to pay back Corsair. And that's how Corsair does business. Lots of companies do that. Accounts receivable going down, though, might mean that Best Buy slowed down the purchasing of Corsair products. So that, to me, like I said, not a red flag, but I'd like to know a little bit more. Now, there's some other options, too. For example, maybe Best Buy just happened to pay off. They wanted to pay off more of their debt. Maybe Corsair shortened the amount of time that someone can borrow money, meaning they're not going to sell and let Best Buy not pay back for 60 days. Now it's going to be 30 days, so accounts receivable will go down. But Corsair's maybe growing. They're getting more money. They're getting more cash, so not a big deal. But there is, like I said, this possibility that fewer companies are rebuying Corsair products like Best Buy. So I'd kind of like to know a little bit more about that. And what makes me a little bit more nervous about it is the fact that inventories have actually gone up by $50 million. Now, maybe that's because we're looking at June 30th compared to December 30th of the previous year. And so maybe because of the timing and fluctuations of the market, maybe those inventories will change. So for example, in December, they've sold much more than any time of the year. Well, maybe that's why their inventory is so much lower at that moment when you look at a snapshot, which I suppose makes sense, right? It's the holidays. And so maybe they, a lot more of their inventory is sold out. But nevertheless, like I said, it's not, in my opinion, it's making me bothered. I want to know the answer to this question, right? It's not something that I can just answer and feel like is totally fine. Now, when we look at goodwill and intangible assets, you can look at this as $550 million that they're counting as an asset. I don't like to count these things exactly as an asset because you can't exactly, it's not so easy to just sell these things and then pay off debt, for example. So yes, it is an asset, but nevertheless, it's not the greatest asset in my opinion, especially goodwill usually means you overpaid for something. Now, $1.3 billion, give or take, depending on whether you count that $550 million of goodwill and intangible assets, but they have quite a lot of assets. In terms of their accounts payable, that's also going down. Is that because they have so much inventory that they're not paying their suppliers, the people making the chips, the people making their boards, they're slowing down purchasing for that? Like I said, making part of that story that fewer people are buying Corsair products, is that what's going on? Or like I said, maybe they're just building up inventory now to sell in the next quarter because their next quarter is a much bigger sales time for them. Their total liabilities are at $848 million, and that's pretty much equal to their assets, assuming you get rid of that $550 million of goodwill and intangible assets that kind of equal out. So, not a big deal, just pointing it out. Now, in terms of their cash flows, so this is why I want to look at the 6 months, because here we're going to look at 6 months ending in June, and it's $74 million versus $23 million. And yet, when you look at the net cash, what cash did you actually get? So even though the income went up by $50 million, the cash provided has actually gone down, give or take by, like $16 million. So why is that? Why do you get less cash out of this company? What are they doing with their cash? Well, I suppose there's some issues with deferred income taxes being counted as income when it's not actually cash. Okay, not a big deal, $4 million. Here's a big deal, accounts receivable, right? So accounts receivable previously, when you're looking at it, I suppose it went up, right? Accounts receivable went up, so that was registered as income before, when in reality they weren't getting cash. So you subtract that. Whereas now accounts receivable has gone down, and so you assume if accounts receivable has gone down, well, they've gotten that much cash, presumably because someone's paid off that account receivable, right? That makes sense. And then another big one is going to be inventories, right? Inventory's gone up. Well, that must mean you have paid for that inventory. And if you've paid for that inventory, that means you used up some cash there. And same thing with accounts payable. If accounts payable has gone down, that means that you've actually had to pay off your suppliers in the meantime. So those are some pretty big factors affecting cash. And it's hitting all those main spots that we discussed before: accounts receivable, inventories, accounts payable. That's going to have an effect on the cash flow in the business. And that's going to be a question of, well, are they stockpiling? Are they having trouble moving product because they're not getting as much cash, right? There's just things sitting around in their inventory. What's going on there, right? That to me is, I suppose, the big question. And so, like I said, there's two ways to kind of look at this. One way is people, or best by people who borrow money especially, and even just consumers are buying less, and so their inventory is being built up quicker than they expected, right? They expected a lot more buyers, they didn't get them. Or is the option, yes, they expect a lot more buyers, but not right now in second quarter. They expect a lot more buyers in third quarter, in fourth quarter, and so they're stockpiling their inventory specifically for that. So that is the question that I personally, if I was going to invest, I'd want to know what's going on. Is this, like I said, they're growing, or is this a sign of bad things to come? Now, in terms of their repayment of debt, $53 million in the past quarter, that's amazing to me. And they, of course, have an increase in cash flow, about $27 million, give or take. So that's also pretty impressive, regardless of everything we talked about. Now, here they mentioned some acquisitions, which were quite small, but nevertheless, I think important, because I think it shows something about the company. They bought a company that wants to make a streamer, a game, someone who plays the game and streams their game to others. They want to make it more professional. Well, they're going to go to Visual by Impulse, this company that was bought by Corsair. And Corsair also bought EpicCam and GamerSensei. Now, both of these, to me, show I wouldn't say a dramatic, but a very different kind of approach that Corsair is going for. For example, they're going after the streamer, and that's with software. They're going after the streamer. EpicCam, or EpocCam, I don't know how to pronounce it, but I suppose there's a large software component to it because people are using their phone, and you can pay for the app if you want all the features. So there's a software component to that company as well. So getting into a little bit more of the software side, I suppose, not just the hardware, not just the physical things. So I think that's pretty interesting. And same thing with GamerSensei, which is teaching people to coach them, players to get coached so that they can do better and better at the games. And I think that's pretty interesting because I don't like to use the word synergistic, but you can see how Corsair gets involved in the community, gets involved in all these things. It opens up a lot more channels for them to do a lot more business with the community, which is growing. So I think that's pretty interesting. And it's also getting them into different types of business, like a software modeled or a software business, which has a lot, I wouldn't say easier time of growing, right? There's different difficulties. And so that will open them up to some other issues. Maybe they're not used to dealing with servers and other things like that. But nevertheless, I think it's more positive than negative. Okay, in terms of goodwill, I just thought I'd bring this up because their goodwill that was so massive is split between two different segments that they look at, gaming components and systems and gamer and creator peripherals. Okay, now in terms of their intangible assets, I also thought this was pretty interesting. When you look at developed technology, that's only 32 million. The bulk of it is customer relationships. And those customer relationships are really important, right? People will come back and continue buying your product. So I think those are important. But like I said, those are hard to really sell individually, let's say, and keep your company. So, you can't use that necessarily to pay off a debt. Whereas a patent, maybe you could sell a patent. Although I don't know how they come up with these dollar figures. But nevertheless, that's how they value it. That's how they think they could sell it, or whatever they paid for it, I suppose. Okay, in terms of accounts receivable, they do mention here, interesting thing, that 2 customers represent 10% or more. I would love to know if that's 50% or more, but we're just told 10% or more. Okay, so it's just something to know that, let's say, a company like Best Buy or whatever company you can think of that's buying a lot of Corsair is a major, or possibly a major contributor of accounts receivable. And like we said, it's going down significantly. But nevertheless, the allowance for doubtful accounts, meaning people who might not pay back, has doubled. That's pretty interesting. Even though accounts receivable has gone down, people might be more likely to default, those that remain. Now, it's not a big deal. It's 500,000 versus 300,000. It's like a drop in the bucket when you look at a $250 million of accounts receivable. But just thought it was interesting. Nevertheless, when we look at inventories, we can see finished goods has increased a substantial amount, right? About, $60 million. Nevertheless, the raw materials has actually gone down. They own less raw materials. They haven't increased purchasing or kept that at a similar amount. And similarly, work in progress, that's gone down. So it's almost looking like they're ramping down the production, right? So that kind of view is correct. The question is why? Why are they ramping down the this process? Is that because they don't need to produce as much because they have so much inventory because no one's buying, or because they've already produced the inventory they think they might have to sell in the 3rd and 4th quarter, which maybe they sell a lot more of their products in? Okay, now when we look at right-of-use assets, it's not a big deal. It's an increase of $25 million. Has to do with their move to a new, headquarter. I suppose it's somewhat interesting, something to keep in mind. But I suppose not a large amount of money that is such a big deal. In terms of the first lien credit, I thought this was interesting. They have no further payments until August 2024 because they've paid off so much of it. And same thing with their second lien credit is even better, actually. It was fully repaid, and I suppose they needed that $65 million, whether it was for purchasing companies or whatever that might be, but it's totally been repaid, so extinguished. So at the end of the day, they don't have to worry about debt until 2024. It is $250 million, but I think that they're making enough money that not only could they pay that off, especially since they have cash of $100 and so million, but not only could they pay that off, but they could roll that forward, of course, like most companies do. So to me, in terms of the debt standpoint, this is a check mark. This is amazing, in my opinion. In terms of their net revenue, so now they're breaking it up by segment. So you see a $40 million increase in terms of the peripherals. When it comes to the components and the systems, also a $40 million increase. However, and this I thought was fascinating, in terms of the profit, you can see this went up by $16 million for the peripherals, whereas for the components and systems, it only went up $9 million. And so I just quickly calculated what's the gross profit for the different segments. Well, it's 33% for the peripherals and 23% for the systems. And I guess that's a lot more of the hardware, like the actual memory, the actual the cooling systems, things like that. So it's a much lower profit margin, which is fascinating to me. Why is that fascinating? Well, it shows me where they should be developing, where they should think about increasing, because they'll get more bang for their buck. They'll actually make more money in those segments. Doesn't mean you can ignore building PCs and building these gaming technologies that people really need, because that's maybe that's how you get into the community, and that's very important, and you're providing a very valuable service. But nevertheless, when you're looking at actual profit, if you see gaming and creator peripherals increasing, that's kind of a good sign. And we just mentioned 3 acquisitions that are focused in that area. So is that where they're focusing a little bit more? Maybe. On the other hand, maybe you want to figure out about how to improve your profit margin on this other area of the systems and manufacturing of DRAM. But that's how we got to the 28% gross profit margin, roughly speaking, of course. And like I said, when we're looking at those acquisitions, we looked at them before, but, streaming broadcasts, Epic Cam, Gamer Sensei, those are all focused on, I suppose, the gamer and the peripheral, not on the system. I assume those are counted there. So, like I said, we're talking about $3 million worth of acquisitions, but so not a big deal, but, might show their focus for the past 2 years. Okay, in terms of geographic information, I also found this interesting. So if you just look at the 3 months, this is fascinating to me. We're looking at a $15 million increase in America, so on North and South. And for Europe and Middle East, a much, much bigger increase, about $47 million. And in terms of Asia Pacific, much smaller, only a $30 million increase. So, when you think of Europe and Middle East, that is a prime area that seems to be growing substantially more than the others. However, if you look at the 6 months, this is also pretty interesting. North and South America, about 120 million. Europe and Middle East, now here, it's about 60, 70 million, so still more. However, when looking at Asia Pacific, it's only 30 million. Well, that 30 million is pretty similar to the last 3 months in June. Well, does that mean that for 6 months, they haven't had much growth? But in the last 3 months in Asia Pacific market, they've actually seen a 50% increase. And will that continue going into the third, fourth quarter? Will that continue growing? And this is the smallest market, smallest market share, meaning it's a very massive market, but in terms of their revenue, it's a small percentage of their revenue. And so if that's increasing, by 50% in the second quarter, is that going to keep increasing the third, fourth, fifth, I don't know, not fifth quarter, but you know what I mean? Is it going to keep increasing quarter after quarter? That is outstanding, and that is a really positive sign. Now, of course, we do have to mention that China put a limit and a cap on kids being able to play games only at certain times, only a certain amount of time. And so that's that's at least 1 billion people, I'm sure, something around there. And that might affect in a very negative way Corsair and this type of growth. However, there is a pull argument. The bull argument is, well, people are going to want to play no matter what. They're going to buy their kids these computers so they can play at home, not in a cafe. Cafe, it's a lot easier to monitor, a lot harder to get around the rules and requirements. But maybe at home, it's a lot easier. Maybe you use other people's IDs. I don't know. And so maybe that's even better for Corsair. There's a part of me that thinks that human beings will behave that way. Nevertheless, I think that it is somewhat risky to assume a parent will help their kid flaunt the laws of China, especially when they can be a little bit harsh when it's to play games, right? So I'm not entirely convinced, but nevertheless, there's a lot of people who live on their own who might have to do that. So like I said, there's some pretty interesting things happening in the Asia Pacific market, I think, for Corsair, something to consider and think about. Now, I thought this was also fascinating in terms of their acquisition of, I suppose, Scuff and Origin. They have direct-to-consumer sales, and they're expecting their direct-to-consumer channel to continue to increase. Now, I think that kind of hints at the idea that they're going to focus on direct-to-consumer sales or that channel maybe for all of their areas. And so these acquisition models, or these acquisitions, I should say, aren't just what they're buying and what they're selling, but also sometimes how they're selling. And that can also be a major impact and something that applies and spreads to other segments of the company, as the people who know how to do that well can then train other parts of the company. So I think that's fascinating and a really strong positive as well, if that's what it means. Now here they mention the introduction of new high-performance computing hardware and sophisticated games is important for their computer systems, right? Because they're going to be buying cooling systems, all these types of things. Now, one thing to be considerate of, I assume those things will increase, especially with VR and AR and all these different areas. But nevertheless, there is something called cloud computing where someone can pretty much play a game and it's on the server, and so they don't own the hardware at all, and it's just a server. And because of the lag, some people have figured out how to considerably cut that down. So there's the possibility that people stop buying and stop building these computers. I don't see that happening right away. I think we'll have a little bit more, information and knowledge about that for it to be an issue, but something to keep in mind. It hasn't taken over just yet, even though it's kind of impressive what they can do so far in terms of the lag. Now here, and this is really important, they mention that their sales tend to be higher in the fourth quarter. Their second quarter is the worst for sales, followed by the first quarter is, I guess, the least worst, or the second least. And then the third quarter, I suppose, by process of elimination, is the second best quarter. And so when we're mentioning about inventories increasing, well, second quarter is the lowest for their sales, and the third quarter is their second highest sales. So maybe they're increasing that inventory to get ready. That's very possible. On the other hand, if they know that the second quarter is, they struggle for that one, well, shouldn't they have been prepared and figured out how to do some of this a little bit better so their inventories aren't moving all over the place and bouncing up and down? Shouldn't they be able to calibrate that and be a little bit more efficient with that? I suppose that's an argument, but I'm just saying there is this possibility of looking at accounts receivable and inventories, this weird thing that we were mentioning going on. Well, maybe that's kind of planned. Maybe they understood that, or maybe that's just a function of the sales system, and maybe they're not great at handling that, and that's what you're seeing going on. Okay. Nevertheless, as integrated circuit pricing goes up, which it is, right, because of there's a demand on computer chips, they can't make them as quickly, the prices are going to go up. That's going to affect Corsair as well, of course. They've seen demand increase, and that's because people are gaming and working from home. While that might, as the world goes back to normal, that might happen less. That might be a negative effect on Corsair. Nevertheless, they are seeing customers upgrading, so that's a great sign, and that's where the customer relationship, that value kind of comes through. You can't sell it to pay off a debt exactly unless you sell the whole company. But nevertheless, you can take advantage of it, right? It is an asset. It does generate money in terms of people coming back and upgrading, so that's a great sign. In terms of the gross profit, right, this is the same margin that we talked about. They're a little more precise at 27.6, but the important part is they tell us why the gross profit margin has not increased, and that's because of freight costs and logistics, driven by inventory supply limitation and port shutdowns. And of course, we're seeing a lot of that happening even now. And so that gross profit margin, right, maybe you'd expect that to increase and get better with economies of scale. Well, here they're telling you a major problem for them are these logistics issue, which are not being resolved. In fact, they might even be getting worse. So that to me is kind of a scary thing in the short term for investing in this company. Nevertheless, Elgato streaming products, really would have driven revenue up, or I should say gross profit up. And nevertheless, it's being held back by all these logistic issues. So something to really think about right now, especially what's going on with this company and the state of the world is not looking good. Now, this big sales, general and administrative expense that went up $24 million, knocking out that gross profit, $8.1 million was due to distribution costs, which has to do with outbound freight and increased sales volume. So as their revenue increases, it almost looks like this expense will continue to increase because of the cost of freight, because of the sales volume at their hubs. So that to me is a little bit scary. Now, to be fair, maybe this has to do with a lot of logistics issue. Maybe this has to do with having to pay more for outbound freight because of the shipping issues that we've been seeing at ports and things like that. So this could also go away. But what's important to understand is not only are these issues affecting the gross profit margin, they're at on just a positive, optimistic side, they're affecting this expense, which knocked out that increased gross profit. So this could be a really detrimental thing. Now, hopefully this will go away as the world goes back to normal and as things settle down, right? Now, if this continues to increase, will it always increase at the rate of gross profit margins? That's a little scary. If that's true, that's really scary in my opinion. I don't think that's true. Nevertheless, it's just something to keep in mind. I think that's important. And hopefully to really understand how serious these logistics issues are to this company. In terms of their interest expense, it's gone down $5 million. We mentioned that before. I thought that was good. And I guess just highlighting it again. Now, in terms of their segment results, I thought this was really important. So you can see $155 million from their gamer and creator peripheral segments. Same amount of money in terms of revenue just from the memory products. So for example, the RAM that they sell. So something to keep in mind, right? If you see that segment really getting hit, that's a major part of the gaming component and systems segment for Corsair. That's half of the revenue for that area. Now, yes, it's a much lower profit margin, so that area being hit might mean a lot less than the peripheral systems, the gamer and peripheral systems being hit, but it is still obviously important. So something to keep in mind. Right? It's really important to understand these companies to see all the different things going on with them. So by the way, if you're enjoying this, please like, comment, subscribe. It really helps the channel. Thank you so much. In terms of their peripheral segment, they've seen an increase of 45 million, and that's because of the Elgato brand and because of their scuff branding stuff. So something to keep in mind in terms of, if you see these brands continuing to do well, you can see this segment to increase, growing, and you know that it is the higher part of their profit margin segment. So, I think that's really positive and something to keep in mind, like I said. Now here, they mentioned that they might need more money for investment or acquisitions. To me, this is kind of hinting at the idea that they're not done buying companies and they might need to release additional equity or debt financing. So that kind of means, in my head, what that kind of means is, diluting shares and taking out more money, which I don't think is great either way. But they do have a lot of cash on hand, so maybe that won't happen. Now, they do mention they have to continuously develop successful market new gear. But what was interesting buried in here is the idea that they have the ability to appeal to the console gaming market through their acquisition of Scuff. So that's another, I don't like the word synergistic, but another thing that acquisition will help them get into that market as well. So there's a lot of room for this company to grow into a lot of different areas. It's pretty interesting. They do mention over here that, once again, they need people to have increasingly high levels of system graphics to, require people to buy the cooling systems and all their hardware stuff. So interesting, something to keep in mind, if games start to be less and less complex or they just stay at the same amount of complexity, something to think about. They do mention that the extended closures in early February 2020 shut down a lot of their factories. They had to ramp up. It was a major problem, supply chain disruptions, but we're kind of seeing that with energy usage in China and some of the shutdowns there. So I don't know, is that going to resolve so quickly? I'm not sure. I'm not sure that's behind us yet. And similarly, they mentioned Taiwan assembles, tests, and packages all of their DRAM. So that was half of that segment that we discussed before, their physical hardware segment. And nevertheless, there's a lot of things produced in China, Taiwan, Southeast Asia. So when there's trade disputes, when there's tensions between South and North Korea, even though they don't make anything in North Korea, whatever they do in South Korea can be affected between Taiwan and China, right? So they have a lot of geographical, let's say they exist in a lot of geographical areas that have turmoil or risk of turmoil. So not great, but there's a lot of companies like that. The problem, of course, is they mentioned there could even just be tariffs placed on China, even if there's not something worse that could seriously affect their business, right? Now, what I found interesting was that they mentioned that certain of their gear collects data related to their gamers and streamers. I tried to research this a little bit more, what's being collected, are people upset or not upset? But obviously, if people feel offended, their data is being taken by the company, that's not good. That could really affect their brand in a negative way. I'm hoping this is fine. I didn't see anything mentioned really. Now, they are owned or controlled, I should say, by EagleTree, 60% roughly. And I did see some conspiracy theories really quickly. One of the thoughts was that, EagleTree is selling call options, so they don't want the stock price to go past their call option. And they're going to keep forcing the stock down, selling off whatever they own to keep the stock down as it goes down. And as their call options expire, they can just buy back that stock. And even if they buy it back at a loss, as long as the call option made them more money, they're fine. And so they control a lot of things. But the point is, now I don't think that's true, but the point is, or I suppose it's possible, but the point is that they might do things that are not in your best interest, right? They might even make money, whereas you will lose money. So they might make money as a 60% shareholder roughly, and you'll lose money even though you just own a few shares. So just something interesting to think about. Like I said, I don't think that's true, but it means you have to trust EagleTree. It means you have to think that even if they're trying to do whatever they think is the best decision, that you trust the way they think and the way they look at things. So I suppose it's a negative just in the sense that you're putting a lot of trust into one specific investing firm. Okay, so the positives, huge growth potential, especially with the geography. Like we mentioned, there might be like this boom happening in the Asia Pacific market, but even Middle East and Europe, that's booming. Product mix, seeing, like I said, I don't like the word synergy, but they have a lot of different types of products. They're growing in a lot of different areas, whether it's console gaming, whether it's streaming, whether it's coaching. It's amazing. And there's also, I think, it seems like a focus on profit, or at least the ability to become more profitable as the logistics improve, right? So short term, kind of negative, but long term, that's really positive because those are things that will improve on their own, even if Corsair does not improve them. Right? Logistics, in theory, should get better, right? But ports being closed should get better. The industry itself is growing, right? The gaming industry. I think that is likely to continue. In terms of their debt and cash flow, so their debt's being extinguished, really positive. Their cash flow, yes, maybe it went down a little bit, but that was into inventory, so maybe be temporarily. And it's positive cash flow. I think that in general, that's pretty positive. In terms of the acquisitions they've done, I think a pretty good job. I haven't looked through all of them, but especially in the past 2 years, very little money, but very, I think, positive and important. Once again, I don't want to use this word synergistic, but these companies might be able to influence and play with each other and help grow the company, not just in what they do, but how they do it and their connection to their customers. So, I think that's pretty impressive. In terms of my concerns, there are many as you've listened to this whole video. Like I said, please comment, subscribe. Let me know what you think about some of these things if you have any answers. So distribution, right, where are they located in terms of their geography? Not exactly the greatest thing. There could be a lot of negatives there. I mean, there are for a lot of companies, but like I said, you don't have to invest in a manufacturing company, so you could avoid some of those issues. In terms of cost, yeah, that's becoming a major issue in terms of them shipping, in terms of, the freight costs, the logistic costs. That's really hitting them because they're manufacturing a lot of stuff over in, let's say, China or Taiwan or all these other countries, and then having to ship it to America, which is much more of their customer base, or the Middle East and Europe, which is much more of their customer base, although Asia Pacific is growing. But, that's obviously a major issue. Accounts receivable versus inventory. Yes, we've given two sides to this, right? We've given a positive side, or I should say we've given a negative side, that's for sure. Fewer people are buying from Corsair. And then there's the other side, which I wouldn't call positive. It's just part of the business, and maybe they're not as efficient as they want to be, and they've increased inventory in preparation for the third quarter, where more people will buy, and second quarter, less people were buying, maybe fewer than they even expected. I don't know. So we have kind of two stories, but it's a concern because I just want to know the answer, which story is actually true. And if we just wait, we can kind of understand what's going on a little bit better. In terms of acquisitions, so this is, like I said before, I thought this was great. On the other hand, goodwill, it means they're overpaying, and that'll happen, but it is a lot. And in terms of my fear, it's really the future. It sounds like they want to keep buying. That means they have to get more debt. I like the idea that they're getting rid of their debt. I don't like the idea that they want to dilute their shares. But they have been doing well on acquisitions so far, so maybe you want to trust them. And the other issue is EagleTree, right? You just, are kind of trusting them as well. And I suppose that's a little bit fair, just simply because obviously they're doing what's in their best interest, and it might align with your best interest. So kind of how do I look at this stock? Entertainment purposes only, of course. But my kind of view is this looks like an amazing stock. It has a lot of potential, has a lot of growth. They seem to be focusing on profit and more profitable margins areas of the company. So like I said, so that's really positive. My biggest concern is really just the short term. And so my feeling is a lot of these short term things will resolve themselves. And I think the stock price is very likely to reflect the fact that that's not the short term, right? It's not 1 month. It's not 2 months. This might be a little bit longer, especially with logistics issues. And so I might be very happy to just wait, see the stock price go down, and be able to buy a lot more. In my head, the only way that doesn't happen, because I don't see the logistics issues being solved internationally, and I don't think Corsair will solve it on their own. So the only way I can see the stock price going up is, I suppose they beat numbers by such an enormous amount, which, like I said, is hard for me to believe. What I think is more likely is people will see the fact that they're growing, things are going better, everything's going better. It's just this logistic issue causing them a lot of stress and a lot of pain, and that will resolve eventually, and so they'll invest now for the future. I think that is very possible, and so you might miss your chance. My personal opinion, though, is you don't have to swing at everything. You could just wait for the right opportunity. So just wait for the price to come down a little bit more, or substantially more, as they keep having issues with this logistics. It's a major problem for their profit. And, you invest when it's much cheaper. And if you miss this opportunity, then you'll get a different one. If you're really concerned about missing this opportunity, I don't know what to tell you. That's a lot tougher, then you have to start thinking about the risks and how well people are planning ahead and all these different issues. My personal opinion is I think the stock price will continue going down for a little bit before it goes back up. But I'm not a mind reader. I don't really know. I'd have to look at the technicals as well, right? That's also a very important part of this. And please subscribe, because I'm sure I'll have an update on this pretty soon, because there's a lot more information, a lot more financial details that they've released since this 10Q. So there is more to talk about. But thanks for watching. Let me know what you think, and please comment and subscribe.